Welcome back to the street. Our next guest says the equity market is no longer moving in perfect tandem and investors should do their homework and should be carefully picking stocks. For more, we're joined by Diana Avigdor, VP, Portfolio Manager and Head of Trading at Barometer Capital. Diana, it's always a pleasure to have you here with us. Even though we want to get into, some individual stock picking, I do want to start with a big picture question. I want to just start with Cyprus. Are you expecting more roiling of the markets to come from Cyprus?
I think you really have to be careful for the next few days. For sure, there's going to be headlines. But the interesting thing is that when the market is going up, we say Cyprus is not important. And when the market's going down, we say it's because of Cyprus. So I think that the market is due for a consolidation pause. Cyprus is very important in the sense that, I think that we would love to see country leave the euro and see how it unfolds. And if we're going to do that, if this is going to happen, it better be Cyprus as opposed to somebody else, and see whether a process could be in place or to see whether it's orderly. So it's very curious. We're very curious to see how this unfolds for many, many reasons. We haven't had a macro risk like this since Draghi iterated that we'll do what it takes last summer, like you said earlier in the show. So we're watching it for many reasons. Don't think that a lot of people think that that there is some kind of big contagion risk going on, but more in terms of political positioning and what is possible to be done with the troika if a country as small as this is able to say no. What is the real political and economic power? So we're looking to see for what the process brings.
And as a trader, you've noticed that Cyprus has contributed to some volatility recently, but also you've noted that market correlations are becoming weaker. Can you explain what that means and what that tells you?
Okay, so market correlations, if you look at equity correlations, that's how the stocks are related to each other. Do they all move in one step or not? A year ago, I sent you guys a chart. Market correlations were in the 60s and 70%. It means that almost all stocks moved more or less together because of the big macro risk. Now, the same metric is in the 30s or high 30s, 39 actually, to be exact. It shows you that you can now actually pick your stocks, pick your sectors. There are themes in the market, and the macro is not going to move you around. In other words, you pick a good stock, a good company, a good sector, you think there is a theme, and then there is a macro event. It doesn't matter how good your company was, it didn't matter how good your theme was, you still went down with the market. So that is very good. That creates depth, that creates investment opportunities, it creates confidence that you're not going to be just moved around with the tide.
Okay, let's talk about some of these themes. One of them, Canadian financials. You like them right now?
We like financials. We like the Canadian financials, some of them. We like US financials and we like Mexican financials. On the Canadian side, we prefer Bank of Nova Scotia, mainly for its global exposure. In the US, we like the Bank of America, Citi, JP Morgan. We think that the banks are normalizing the stress tests that came out. Some of them were disappointing. The fact that they weren't allowed to do exactly what they wanted, such as Goldman Sachs and a little bit Citi, but we think it's temporary. The banks are normalizing, and they're going to pay back some money to their shareholders, and that's a big theme in the market, which is yield, existing yield and potential yield and growing yield, together with some capital appreciation.
Diana, is now the right time, though, to be getting into those bank stocks with a number of them sitting at the tops of, at the very least at the year? Should you be waiting for a pullback?
Within the market framework that we're up so much and we're due for a consolidation, all else equal, I think the consolidation will be shallow. In terms of new highs, Amber, new highs make new highs. So yes, we still think there is room to grow. This is a beginning of the normalization. It's just finally starting to move into a healthy environment. Up until now, it was riskier. Yes, it moved up, but it was riskier. It was just momentum type of money. Now there is some real metrics. and it's still possible to make money on this if you think that the market is in okay shape. Now, U.S. is in a better shape right now, and so we've kind of diversified out to globally, which is within our mandate, but we still seek that yield, and we still seek the relative strength movers, which is what our style is like. We don't go into we don't try to pick the bottom and kind of go against the market.
All right, Diana, we'll leave it there. Thanks so much for joining us this morning.
My pleasure.
That was Diana Avigdor, VP, Portfolio Manager and Head of Trading at Barometer Capital.